proven strategy for real estate success. Today's episode is all about proven strategies for real estate success, especially in the context of the current economic environment. If you're tuning in today, you're likely interested in learning how you can build wealth through real estate, despite the challenges and uncertainties in the market. Whether you're just getting started in real estate investing or you're already a seasoned investor, this episode will provide you with the tools and strategies needed to succeed in today's market. Hello, Wealth Rise listeners. I want to start by expressing my deepest gratitude for your continued support. Whether you've liked, shared, or subscribed to this episode, you're not just part of a podcast, you're part of a growing community of people who are dedicated to achieving financial success and freedom. Your engagement means the world to me, and it's because of listeners like you that we're able to continue creating content that can change lives. If you haven't subscribed yet, please take a moment to do so, and don't forget to share this episode with anyone you think could benefit from it. Now, let's dive into today's topic. What if I told you that the strategies that worked in the past might not be as effective today, and yet there are still proven, updated tactics that can help you succeed in the real estate market right now? If you're tired of hearing the same old advice and want to know the specific strategies that can work in today's economy, this episode is for you. Let's jump in and explore the steps you can take to succeed in real estate, even when the economic environment is uncertain. Understanding the current real estate landscape. Before we dive into the specific strategies for success, it's essential to understand the current real estate landscape. The market in 2025 is significantly different from previous years, influenced by factors like the post-pandemic recovery, inflationary pressures, and shifts in consumer behavior. Economic factors impacting real estate. The real estate market is affected by several key economic factors. Interest rates. Central banks, like the Federal Reserve in the U.S., have been increasing interest rates to curb inflation. Higher interest rates affect mortgage rates, which in turn impact housing affordability. This is particularly challenging for first-time homebuyers or those looking to upgrade. However, rising rates also create opportunities for investors who can afford to pay in cash or can still obtain financing at a reasonable rate. Supply chain disruptions. The construction industry has faced significant delays due to global supply chain disruptions, which have increased the cost of building materials. These challenges have led to delays in new construction projects and have caused an increase in construction costs. This creates a supply shortage in some markets, which drives up property values and presents opportunities for capital appreciation. Inflation. Inflation is one of the most critical factors in the current economy. The value of money decreases and goods and services become more expensive. For real estate investors, this can have both positive and negative effects. On the one hand, inflation increases property values and rental income, but on the other hand, rising construction and maintenance costs can eat into profits. Understanding these dynamics is essential for making the right real estate decisions. With this context in mind, let's look at the strategies that will allow you to succeed in this challenging yet opportunity-filled environment. Proven strategies for real estate success in 2025. Now that we understand the current landscape, let's move on to the strategies that can help you thrive in the real estate market today. The key is to adapt your approach to the current economic conditions while leveraging the proven tactics that have stood the test of time. Number 1. Focus on cash flow properties. One of the most critical strategies in today's economy is investing in cash flow properties. Cash flow properties are real estate investments that generate positive monthly income, typically from rental properties. This strategy is particularly important when the market is volatile or prices are rising due to inflation. Here's why cash flow properties are a smart move in the current market. Steady income. In times of economic uncertainty, cash flow provides a cushion against market fluctuations. Even if property values dip, you're still generating income from renters, making the investment more resilient. Rental demand. With the cost of homeownership rising due to higher mortgage rates, many people are opting to rent instead. This creates a strong demand for rental properties, especially in areas with job growth and economic stability. Long-term wealth. Cash flow properties build long-term wealth through both appreciation and monthly income. As your tenants pay down your mortgage, your equity in the property increases, allowing you to reinvest in more properties. To succeed with this strategy, it's crucial to conduct thorough market research and focus on properties in high-demand areas where people are likely to rent. Look for properties that can offer a high rental yield and steady cash flow. 2. Invest in multifamily units. Multifamily real estate is an excellent option for investors looking for scalability. Instead of buying a single-family home, investors can purchase multifamily units, e.g. duplexes, triplexes, and apartment buildings, which generate more income per property. Why invest in multifamily units? Higher cash flow. More units mean more tenants and higher overall rental income. Even if one or two units are vacant, the others can cover the expenses. Economies of scale. Owning multiple units in a single property allows you to reduce your operational costs. Instead of maintaining several different properties, you can centralize maintenance, property management, and other costs. Diverse tenant base. Having a larger number of tenants reduces the risk of losing income if one tenant moves out. This is particularly important in times of economic uncertainty. Investing in multifamily units can require more capital up front, but with the right financing options, it can lead to exponential growth in your portfolio. Look for properties in areas with growing populations or near major employers, schools, or transportation hubs. 3. Leverage technology for property management. In today's fast-paced digital world, leveraging technology is essential for staying competitive and successful in real estate. Property management software, online marketing platforms, and digital communication tools make it easier than ever to manage your investments efficiently. Here are some ways technology can help you succeed. Automation. Automating tasks such as rent collection, maintenance requests, and tenant communication reduces your workload and improves efficiency. It also provides tenants with a seamless experience, making them more likely to stay longer and take better care of your property. Data-driven decisions. Technology gives you access to powerful tools that can analyze market trends, property values, and rental prices in real time. This data helps you make informed decisions about where to invest and when to buy or sell. Virtual tours and marketing. In an era where more people are shopping and researching online, virtual tours and online listings can help you attract tenants quickly. High-quality photos, videos, and 3D tours can set your property apart from the competition and reduce vacancy rates. Investing in the right property management technology will save you time, improve the tenant experience, and help you make smarter decisions. 4. Look for distressed properties and renovations. In a market where property prices are rising, finding distressed properties can be a great way to enter the market at a lower price point. Distressed properties are those that need repairs or have been neglected, and they are often priced below market value. Here's how to turn a distressed property into a success. Renovation potential. A distressed property often has significant renovation potential. By investing in repairs and improvements, you can increase the property's value and make it more attractive to buyers or renters. Value-add strategy. This strategy involves adding value to a property through strategic renovations, such as upgrading kitchens, bathrooms, or increasing square footage. This can lead to significant appreciation, especially in areas with rising demand. Equity building. Buying distressed properties and renovating them allows you to build equity quickly, especially if you can purchase below market value. However, renovating distressed properties requires experience, the right contractors, and a clear understanding of the market. Be sure to accurately estimate repair costs and renovation timelines to avoid going over budget. 5. Diversify your portfolio. In a volatile economy, it's crucial not to put all your eggs in one basket. Diversifying your real estate portfolio can protect you from market downturns and increase your chances of success. Consider including different types of properties, such as commercial real estate. Retail spaces, office buildings, and industrial properties can be a good hedge against residential market fluctuations. Vacation rentals. Short-term rental properties, especially in popular tourist destinations, can offer higher rental yields, although they may be more susceptible to market swings and regulatory changes. Real estate investment trusts, REITs. If you prefer a hands-off approach, REITs allow you to invest in real estate without actually owning physical properties. They provide exposure to commercial and residential real estate markets and are typically more liquid than owning physical properties. A well-diversified portfolio helps reduce risk and gives you multiple streams of income. Conclusion: proven strategies for real estate success. There's no doubt that the real estate market in 2025 presents unique challenges, but with the right strategies, it's still possible to thrive. Cash flow properties, multifamily units, leveraging technology, renovating distressed properties, and diversification are proven tactics that can help you succeed in the current market. As always, it's essential to stay informed, adapt to changing conditions, and take calculated risks. Real estate has the potential to build long-term wealth, and with the strategies outlined in this episode, you can position yourself for success. Thank you once again for being a part of the WealthRise community. Don't forget to like, share, and subscribe if you found this episode valuable. Keep building wealth, stay focused, and we'll see you in the next episode.